All right, welcome to The Explainer. Today, we're diving deep into Titan International's Q3 2025 earnings call. Now, if you're not familiar, Titan is a huge player in the heavy equipment world. Think giant tires for tractors and mining trucks. So their results really give us a pulse check on massive global industries like agriculture and construction. And let me tell you, this quarter's results were, well, pretty fascinating. Let's get right to it. Okay, here's what we've got on the agenda today. We're going to kick things off with the Q3 numbers themselves. Then, we'll unpack what management is seeing in the broader economy. After that, we'll break down their different business segments, dig into the key questions analysts were throwing at them, and finally, I'll share our rating and forecast. Oh, and we'll cap it off with a little trade idea, just for fun. So let's jump in. First up, let's talk about the numbers for Q3. And honestly, the big story here is just how well Titan is performing, especially considering the environment. I mean, this is supposed to be a tough time for them, the bottom of the cycle, but they're still managing to post some seriously impressive results. It's a classic case of beating expectations at the trough. Okay, the number that just pops right off the page is this one, a 45% jump in year-over-year adjusted EBITDA. I mean, wow. That is a massive beat. It's not just a small win. It shows that this company is executing incredibly well on an operational level, even with all the challenges in the market right now.
And get this, that huge jump in profitability? It's not just because they're pinching pennies. They're actually growing sales too. The top line was up 4% year over year, hitting $480 million. Now, why is that so important? Well, because it's a real glimmer of hope that the ag market, which has been pretty sluggish, might finally be finding its footing.
But wait, it gets even better. Let's look under the hood a bit. Their gross margin expanded by 210 basis points. That's over 2 full percentage points. That's huge. Plus, they're generating a ton of cash, $42 million in operating cash flow, and they're being smart with it, paying down their debt. This tells you they're not just treading water, they are actively strengthening their balance sheet. This is a financially healthy company. All right, so those are the numbers, but what's the story behind the numbers? Let's switch gears and talk about what management is seeing in the big picture, the macro environment. And you know what? They're sounding pretty darn optimistic about what's coming down the pike. So management is basically connecting the dots here for us. You've got potential Fed rate cuts, making it easier for their customers to finance big purchases. You've got a new China trade deal that's set to boost soybean demand, a huge deal for American farmers. And then you have government support programs kind of putting a safety net under farm income. When you add it all up, it starts to look like a really strong setup for a rebound in demand heading into 2026. Now, one of the elephants in the room is always tariffs, right? But here's the interesting thing. Management sounds totally unfazed. Why? Because their manufacturing is spread all over the world. They've got plants in the U.S. and offshore, which gives them this incredible flexibility. No matter how the tariff situation plays out, they can pivot and position themselves to win. It's a really clever strategic hedge. Okay, so this brings us to a really crucial point. The strength and resilience we're seeing from Titan, it's not some happy accident. It's the direct result of a very deliberate, long-term strategy to diversify their business. And boy, is that strategy paying off right now. Just look at this revenue mix. Sure, agriculture is the biggest piece of the pie at 41%, but earth-moving and construction and the consumer segment aren't far behind. What this chart really shows is balance. They're not a one-trick pony. This balance is exactly what insulates them when one particular market, like ag, goes through a downturn. Let's zoom in on the ag segment for a second. Sales are up 7% year over year. How? Well, even though things are a little soft in the U.S., their business in Latin America, particularly Brazil, is absolutely booming. It's more than picking up the slack. This is that geographic diversification we were just talking about, playing out in real time. Now let's hop over to Earthmoving and Construction, or EMC. This segment is also up by 6%. The big driver here is their aftermarket mining business in Europe. Think of these giant custom tires that mines rely on. That's a high-margin, sticky business. On top of that, they're seeing some nice surprise orders from light construction customers back in the States. And finally, the consumer segment. Now, at first glance, a 3% dip year over year might not look great, but here's the key detail. It was up 14% from last quarter. That's a huge sequential bounce back. It really highlights the power of their aftermarket business in this segment. You know, everything from landscaping equipment to ATVs. It's much less cyclical and provides a really solid foundation. All right, let's get to my favorite part of any earnings call,
the analyst Q&A. This is where you can really read between the lines and gauge the sentiment. And on this call, one thing was crystal clear. Everyone wanted to know what the future holds.
The number one question, the one that everyone was dying to ask, was simple. Have we finally hit the bottom in the agriculture market?
And the CEO, Paul Wright, didn't mince words. He came right out and said it. I think the best way to characterize that is we're at a bottom. You really can't get much more direct than that. For investors, that's a huge signal of confidence from the person at the very top.
Okay, the other major theme in the Q&A was inventory. For the past year, a huge headwind for Titan and its peers has been destocking. Basically, their big OEM customers were selling off the equipment they already had instead of ordering new parts. So naturally, analysts were asking, where are we with that now? And just to make sure we're on the same page, destocking is when companies sell down their existing inventory, which means fewer new orders for suppliers like Titan. But here's the good news. Management confirmed that inventory levels are now at a good neutral level. That is a massive update. It means a major drag on their business throughout 2025 is pretty much gone.
Okay, so we've looked at the numbers, the macro picture, and the Q&A. So what does it all add up to? What's our call on the stock? Let's get into it. So here's our forecast. We think Q4 will be pretty much in line with normal seasonality, so don't expect fireworks there. The real story is 2026. With the ag market recovering, we see revenue climbing back to that $2 billion mark and adjusted EBITDA reaching around $145 million.
Putting it all together, we are officially initiating our coverage on Titan International with a rating of outperform.
And our thesis is pretty straightforward. First, you've got a company that's operating incredibly well at what looks like the bottom of the cycle. Second, that big negative of inventory destocking is now behind them. Third, you've got multiple tailwinds, interest rates, trade, government support, all lining up for 2026. And finally, that strong aftermarket business provides a really stable floor. It's a fantastic setup.
All right, let's wrap this up with our outrageous but plausible idea. This is where we throw out a trade idea for you to think about. Again, just an idea.
So here's the trade concept. The premise is simple. We believe the market is still pricing Titan like the downturn is going to last forever. It's underappreciating the resilience of their aftermarket business and the turn that's coming in the ag cycle. So the idea? Use long-dated call options, what some people call leaps, that expire in late 2026. This gives you leveraged exposure to the recovery we see coming, while your risk is capped at just the premium you paid for the options. When sentiment shifts on this name, it could shift fast.
And of course, I have to say it, this is for informational purposes only. Please do your own research. This is not financial advice.